a panel on trading the transition, how artificial intelligence is rewriting power market models and creating a new wave of energy traders. To unpack this fascinating topic, we'll welcome to the stage Joe McDonald, co-founder and CEO of TEM. We'll welcome back Jan-Willem Rombouts, founder and CEO of Beebop. We also welcome Jens Hartmann, co-founder and CEO of Enmacc. And to moderate this panel, it's a pleasure to welcome Veery Maxwell, partner at Galvanize Climate Solutions. Let's have a round of applause and welcome them to the stage. Over to you.
Thank you, and thanks for having us here today. I'm very excited for this panel because I feel like I'm in from San Francisco, where the only conversation is about how the grid is stymieing all of our AI data center ambitions, and this panel is going to touch on the opposite, which is how can we use AI to hopefully increase utilization, increase efficiency, reduce friction in the system. I'm going to have each of my panelists do a quick round of intros, both to themselves and a little bit about each company, and I think particularly touch on, who your customers serve and where you sit in the value stack, just to orient folks to it. Joe, you want to kick us off?
Yeah, of course. So I'm Joe. I'm one of the co-founders and CEO at TEM. I've been in the energy and energy trading markets for over a decade now. My first company actually aggregated battery storage and renewable generation and traded them in the short-term UK electricity markets, like day ahead within day. We sold that to Shell in 2019, and that became Shell's short-term trading desk also for electricity. With TEM, we're building the world's first AI-native transaction infrastructure. What that effectively means is way more efficient price discovery and payment movement between those that need to get paid for the electricity they generate in a market and those that need to be paid for the electricity that they both are generating and using. We actually built about 24 months ago our first neo utility run on the agentic framework that's kind of got exclusive access to this pricing infrastructure, and that's now scaled in 24 months to over 500 million in gross transaction value annualized. It serves about 5,000 businesses. This ranges from your largest data centers, manufacturing sites, all the way down to kind of your corner shops and local schools. So super excited to be sharing some of those stories and learnings today.
Great, thank you. Jan-Willem?
So Jan-Willem Rombouts is my name. I've also been in the flexibility space for quite a bit. Since 2010, after a career as a quant trader at Goldman Sachs, I started up Restore, which grew to a few gigawatts of power under management and was acquired by Centrica, similar period, 2017-18. And so now Beebop, and what does Beebop do? Beebop is an infrastructure layer. It helps suppliers, traders, utilities upstream to get access to their customers' flexibility. There are giant amounts of batteries, solar, other distributed energy resources being installed behind meters. Suppliers don't have access to that. Typically, traders do not either. And so we give them access to that and make these assets tradable in all the markets where the biggest value is. And that includes imbalance management, that includes continuous intraday and others. And for OEMs, manufacturers of these devices, we give them access to virtual power plant programs that are run either by utilities or suppliers in markets. And in that way, they can provide energy bill savings to their end customers. So that is our business model. Today, Beebop is deployed from the US through the UK and Europe. We're starting in New Zealand and Australia with more than a dozen large suppliers and utilities who are trusting that infrastructure to bring new products and services to their customers. So excited to be here.
Great, and Jens?
Yeah, thanks for inviting. To close the round, Enmacc is a marketplace for energy trading. So we provide the market trading infrastructure actually to the traders, the market participants, while most of the, let's say, innovation was very much focused on the short-term power markets, where through renewables we have seen a lot of change and volatility. We focused on the other side of the market, which means longer-term hedging and longer-term trading. So on our platform, companies trade power, gas, and as well carbon contracts for the next years to come, sometimes starting in the next weeks. So it's about longer-term speculation, hedging, and procurement. All of that comes together on one platform. Today we're serving 670 clients in Europe, and the spectrum goes from industrials, corporate clients, lots of utilities, hedge funds, investment banks, oil traders, and these specific trading houses as well. So we want to be a marketplace for everyone with a clear idea of democratizing trading as well. So giving access to smaller participants who had not access before. And as I said, we are the infrastructure piece, if you wish, which enables hopefully others to do better business on our platform. But we are not competing with traders, but trying to serve everyone equally.
Great. And now I want to kind of dive more deeply into how you guys are actually using AI in your businesses, and also kind of how you view the evolution of this, given the fact that we're now talking about a technology that I feel like is different today than it was last week and the week before. So hard to keep up. But Joe, let's start with you and with Tim. I mean, where do you think are the right places for AI, and where are the wrong places? And what's kind of TBD in this energy trading stack? What still needs human touch, and what can you displace with new tech?
Yeah, it's a good question. Defining the negative space of where is the wrong place. I think today it's just too early to say. Like, everywhere should be the right place. We're discovering so much, as you say, day by day, week by week. At TEM, we really think about it in two areas. So we have our almost like old school AI, like the deep machine learning, reinforcement learning algorithms that are effectively doing an operational research problem of solving fulfillment between many buyers and many sellers in a market, looking to create price discovery and forward transactions for electricity. That's like built on the back of like the Uber fulfillment algorithms and Amazon fulfillment algorithms. It's just on steroids when it comes to electricity, and it's probably only become possible in the last 2-3 years. So that's kind of like at the infrastructure layer. What we also find fascinating is with access to that kind of price discovery, when you build your agentic framework on top of that, our Neo utility that we run today serves 5,000 businesses. If you compare that to another UK supplier of a similar size, they have about 180 to maybe 210 humans running that. We have 5, right? So off the back of this kind of infrastructure that we're seeing, you have the opportunity to automate billing, back office, trading, service, growth. And we run all of this in over, I think now, 2 terawatt-hours of annualized power without a single trader, right? So there is a disintermediation opportunity here. But it means the market participants actually win, maybe more so than the current intermediaries. And that is probably the disruption risk for AI and energy at the moment, at least on the trading side of things.
Yeah, and I guess just to maybe double click on that, and obviously you guys please feel free to chime in here, but how do some of the incumbent layers that you guys are maybe disintermediating with the technology, like, are they also deploying AI? Like, are they kind of using new tech to fight back against disruptors like you guys?
Yeah, I think probably Enmacc shared a similar philosophy. If you rebuild the nucleus, it's very hard to do. It's very difficult for an incumbent to kind of innovate themselves and rebuild their nucleus, cannibalize their trading profit, replace their trading teams, introduce new systems, cancel all their SaaS contracts. I think it's quite difficult. But in a similar sort of theory that we have, all users of the new infrastructures can still be winners, right? There's still a role fundamentally for trading and optimization, especially in the short-term markets, to manage the residual sort of imbalance. And there's also just if you've seen the same in financial services, you still have the role for speculative trading and money-making opportunities, utilizing AI, which probably be much more in line with your traditional intermediaries that are currently doing power trading, but a little bit more physical. So yeah, I think there's going to be just a massive shift over the next 10 years. But you'll probably still see some of the same winners that have innovated, and some new entrants that now, with a more democratized access, can come to market.
Yeah, maybe to add to that, so if I look at the market of energy suppliers, utilities, but let's focus on suppliers for a bit, who typically also have trading capabilities, we see that these internal teams are certainly accelerating enormously on anything that has to do with analytics. And they sit on massive amounts of data, They have access to more data than any startup scale-up that wants to come in initially. And that means that the bar is just rose significantly for any kind of SaaS product that you bring in that is sort of purely analytical, that is becoming more competitive with not invented here dynamics. At the same time, I think a lot of suppliers in this new energy world are asking, what is my right to win? And that's now different from a couple of years ago. There's brand, trusted brand, not to be underestimated. If you look at the large energy companies in Europe, in the UK, there's something still of a brand that people trust their energy with. It's not always the same in the US, I think, in the utility space. But so there's brand, but then there's also trading. And I must say that I've been impressed by some of the investments on algorithmic and automated trading with some of the large suppliers across Europe. So where they say, well, this should be core competence. And if I'm going to play a role here in the energy system, they have typically access to a lot of liquidity in the market. They have a lot of experience in trading, but then they're moving to more algorithmic and automated trading on many markets, also with the eye on what can I do for my customers in this new energy world.
Any comments there? Should we keep
I think
cruising?
that again, the bigger picture, energy markets are incredibly volatile today and as well interconnected. The different kind of asset classes, or oil markets affect gas affects very much the power markets. And there's a lot of money to be made. We know that the big trading shops, sometimes the smaller ones as well, they are profit machines right now. So that attracts necessarily the investment. And if companies like a Citadel, biggest hedge fund in the world, they're extremely active in the full stack of trading, from weather prognosis down to execution. I love the idea that energy markets today really attract the brightest minds, and arguably functioning markets are needed for that, profit opportunities as well. What I think where we all aligned is that we would love to get more participants as well to have a fair share or participation in these markets. So it's not just a few large players who run away with the money, if you wish. This kind of democratization aspect I think is important. And so thinking energy trading always at scale, as from whatever angle we look at it, it's all about liquidity, it's all about having easy access to the markets and establishing business models which scale and quite naturally, I think, blur a little bit the lines between what used to be wholesale trading, to give a little bit of feeling that was roughly 200 companies in Europe or trading houses. If we talk about new business models, I think we can enable a couple of hundred or thousand companies to have easier access to the market and change as well the dynamics. Will they necessarily be able always to compete with the best? No. But they will be able to have a fair procurement, lower transaction costs, a better risk hedging as they have it in the past.
Yeah, it is interesting to think about if the asymmetric information that has driven a lot of the outsized returns for some players in trading, if that edge becomes harder to maintain in a world where AI is ubiquitous. We'll see. I think Citadel's still doing pretty well. Let's touch a little bit on, as we think about, particularly around Europe, the growth of both behind the meter and front of the meter assets. I think we could talk about this across many European markets, but we are obviously seeing an explosion in storage assets in both cases. Jan-Willem, how are you thinking about kind of the different technology approach for different types of assets, and how are you guys looking at that from Beebop's standpoint?
Yeah, so first of all, as it is in the energy transition, it's an and story, or all of the above. So front of the meter storage has a very important role to play in the grids. There are challenges there as well, getting your battery interconnected, getting some of the ramp rate constraints of grid operators and others. And so what we observe is at the same time, there are a couple of regulatory changes that are happening across Europe that incentivize battery deployment behind the meters, both C&I and B2C. For instance, in the Netherlands, net metering goes out, and what do you see? Suddenly, I think it's a year's worth of time that there are 170,000 batteries installed in the residential segment. That's substantial, and so there's an explosive growth there. And so if you then zoom out a little bit and you see the massive capacity of solar installed in Europe, battery that is catching up with the price curve of batteries catching up very quickly, electric vehicle deployment, you just realize that there is tens of gigawatts and soon 100 gigawatt plus of real valuable flexible power sitting there. And so then it's just a first principle point that is, for a lot of it, just idle capacity. The use cases that you see a lot in Europe are for self-consumption, just the basic stuff. I'm going to install a battery and I just want to use more locally produced energy. A lot of the solar plants were installed over the past decades. They're not connected, they're not controlled, and they're certainly not integrated into the power system in a way that the power system is looking for flexibility. And so where we play there, and maybe to just make the link to AI, is from a trader perspective on short-term markets, if I have a big battery, 100 megawatts that I can trade, I can forecast availability fairly precisely. I know that if I'm going to send control signals, what kind of ramp rates it's going to give me. I know the cost of it, the cycles, etc. But now what if I have 100,000 batteries sitting behind meters? I have to manage their cycle budgets, all of these warranties, but all of these customers are sitting on an energy tariff, they are sitting on a grid tariff. That's a cost that I need to take into account, because if I'm going to make money on continuous intraday, but at the same time I'm going to increase the grid charges for my customers, I have a problem. And then on top of that, what do you do with control decisions that you need to take, let's say, minute per minute of 100,000 assets that are highly stochastic with limited observability and all of that? And that is high complexity, and so what is needed is to abstract away all of that complexity and to present tradable shapes in a way that a trader can trade with whatever they're using, mixed integer linear programming or reinforcement learning engines, and that they can trade in exactly the same way as a battery. And that suddenly, if you do that, that enables value of the whole market that can be shared with customers again. That's good for the customer, that's good for suppliers who can then build sticky, high margin product. But so AI is necessary to really understand that stochasticity. So behind the meter, what is happening there, solar forecast, load forecasts, all of that. User constraints, because an EV, well, if you want to trade that in intraday markets, make sure that you know the dynamics of the constraints for the user. And then abstracting that away into something that is fairly low dimensional and that is native to a trader. And that's where AI unlocks a whole ton, because you can essentially make this problem that scales linearly with a number of resources, you make that sublinear, and that creates an unlock in the markets.
It's fascinating because it's kind of coinciding, this decentralized trend of assets, flexibility, is also potentially unlocking the solve for trading markets more generally, because now what you have is you have a decentralized asset class that can act to do supply and demand fulfillment, right, on the short-term markets, right? So supply and demand and probabilistic pricing is exactly what all trading is about, right? It's about saying I want to predict my supply and demand over the next 3 years. That's what the wholesale market does, all the way down to I need to predict my supply and demand for the next half an hour, and that's what within day does. And it's all about trading and managing that kind of imbalance. Now you have this decentralized asset class. What you have the opportunity is to really change the way we think about trading with AI full stop, because now you have AI that can do fulfillment prediction and probabilistic pricing, so that removes the need for forward markets and wholesale market trading. And you now have an asset class, market participants, that can act as the kind of infrastructure layer to manage that imbalance without even having to take liquidity into short-term markets. So you shift away from this kind of centralized sort of trading model to a decentralized, just far more sophisticated market participant model. And ultimately what that means, it means, I think it's about $1 trillion a year gets taken out in transaction fees today in trading markets. That goes back into the pockets of battery owners, that goes back into pockets of schools, that goes back into pockets of generators. And that's ultimately like a huge opportunity for humanity at a wider scale. because it brings down the cost of the electron, which is like the #1 priority for every market on Earth right now.
For sure, and I think one of the things that's missing in the conversation is actually specifically tying some of the innovations you guys are working on to the affordability crisis and how that would actually drive through and reduce costs at scale, because it seems often undiscussed in many circles. Jens, let's talk a little bit about, I know one of the things you guys are thinking about is agents in this stack, and how, how you think about agentic trading and what the role is of human energy traders, which I feel like we all think of energy trading as very like a group of guys with their computers pounding away at their terminals. Tell us what the future looks like.
Just to set the base in a way, simplifying the job of a trader, it's about defining trading strategies and then executing them. On the defining strategies, that can be speculative trading, but that can be as well as simple hedging. If you are an asset owner, or if you have an industrial production, you want to hedge a couple of years ahead. It doesn't have to be complex strategies. But what you're dealing with is more and more as well unstructured data in the energy trading world. On the structured data side, I think machine learning found its way into energy trading already many years ago. Now it's much more about how to make sense of what we call sometimes sentiment in the market. And that can be the next Trump tweet, or it can be as well other kind of industrial news which you need to feed together. These cycles get much faster, and it gets much easier as well for smaller players to actually make sense out of the noise. So similar to other markets, I think energy market traders have the same task here. A second actually is then, if you know what you want to trade, how do you find the trade, your trading opportunity in the market? That's where Enmacc focus around. So we as a marketplace want to provide the best trading opportunities, and we provide agents to traders doing this sometimes tedious task of following multiple screens, opportunities, watching out for arbitrage opportunities. These kind of processes, an agent dealing with multiple informations at the same time, an agent can do that better. Today it's still a human in the loop, so we are proposing always the next steps. But I think it's quite kind of obvious that once traders are trusting the agents, that they will rely for the execution piece on an agent like ours. We're still pretty much alone around this, so no one else is developing it. Maybe it's a bad sign, I don't know. I still bet on exactly helping the other traders. And to be very clear, we sometimes talk about, are we replacing the traders and how is the job changing? We have not enough energy traders in the market. Through the changes of the energy markets in the last years, there is traders are a scarce resource, if you wish. And I think if democratization, smaller players want to afford to have market access, they have to go either through service providers, companies doing the job for them, or they have to rely on smarter software/agents in the future to do the tasks. So I find it a very exciting way to deal with the ever-growing mass of information traders have to deal with, and simplification leads automatically as well to automation. And I think most of the traders will appreciate that.
How about you both? Are you guys deploying agentic tools in your stack?
Yes. And so one of the things that is interesting if you start to deploy customer assets in trading markets is that if a customer looks at what's happening with the power profile, that they get a little bit confused. What's happening with my battery now? And so I talked about the upstream part, so for us downstream, we have agents running that actually explain what is happening and why certain choices are being taken. And so if you have, a typical sort of battery cycle, it might be quite idle overnight, and then it starts discharging as wholesale prices start to increase in the morning peak. Then maybe you have some imbalance opportunities where it reacts in real time. Then you go back to self-consumption. And so there are these multiple streams that are actually happening in the market. And so on the one hand, you want to make things as simple as possible to a customer. But then also a lot of these customers who are installing a battery or buying an EV, those are the first movers. They want to understand, unfortunately to some extent. And so you have to bring that in a language that is understandable. And so we have our own LLM application that we developed there that you can sort of tweak to the expert level for suppliers, so that it can explain it like to your grandma, as they say, or really to the experts, to make it understandable and sort of allow a conversation, a double click for customers. So that's downstream as an application. Yeah.
I promised you a bit of spice.
Please.
Our view is that it's all a matter of timing, right? It's not going to happen overnight. But our view is there is no world in the future for physical power where you need traders or trading services or back office. So actually, we're not thinking about deploying an agent to do the job of a trader. We're just disintermediating the process through fulfillment and fulfillment algorithms. Where we see the real application of the agentic layer is in the customer application, which is today the 99% businesses, homes, get pretty poor service from their utilities and suppliers. That's been proven, have frustration around bills, but actually what they want to do is speak to humans. It's often the case. Actually, it's why we have so much procurement. You know, in the UK, 80% of all businesses is procured through brokers and consultants, because customers feel so sort of spaced away from engaging with the market. They don't understand, it's too complicated. They just want to speak to a human on the phone. That has been impossible to disrupt until now with the agentic layer. So I think what you're going to see is the new kind of customer application layers, new neo utilities. We expect on top of our infrastructure to introduce around 1,000 new utilities in the next 24 months in a market that's traditionally only had 30. So that's the kind of like dramatic change I think we're going to see in that application layer. But not to say in non-physical power and in speculation and in short-term like trading markets, I think there's still going to be a role for both the agentic and algorithmic trading and obviously human traders as well.
For sure. I would be remiss if I didn't point out that my portfolio company Octopus has also been an early adopter of this, and I feel is out ahead on the consumer relationship management and customer support side of it. But yes, generally speaking, and certainly from a US standpoint, that layer is abysmal. I mean, it's the only thing worse is like the cable companies. So, it's a really low bar. Yeah, very interesting. I'm gonna get to one more question for you guys, but then I think we'll end up having time for one or two questions from the audience. So folks should be thinking of what they want to ask this crew. But I mean, given what you guys see in these markets today and kind of the rapid technology evolution here, who do you think in this energy stack, when you think of, the utilities, the optimizers, the traditional traders, the hedge funds, like all of the players in this stack, who do you think is best positioned to win? And you can't just pick yourself in this conversation. So, Jens, you want to kick us off?
Two aspects. I do think we see such a tremendous development in all of these layers that I still find it hard to believe that fully integrated models will make it.
Mm-hmm.
Not on the stage here, but a company like Fuse or so in the UK as well, making big waves, doing everything from basically building solar, owning, operating it, up to the consumer. Maybe, but I do think on all of these layers you will have specialist players who are really, really good at what they do. And as I said, the market is big, it attracts smart brains, so I do think that specialized business models will definitely work. That said, in trading, we know that owning a vertical stack makes a difference. We call that owning a flow. If you have your own assets, if you can collect assets, and that can be many small car batteries you collect like an octopus, or it can be your industrial loads. That matters in the market as well. And that is probably where a marketplace model like ours will always compete with vertical integration.
Mm-hmm.
So for sure we'll have more intelligence at the fringes, I would say, where a lot of the work usually a market does. Aggregating information, aggregating that to one price, sending signals as well back. That's essentially processing information. And AI can process enormous amounts of information, much more as in the past. So we will see more decentralized business models which are essentially competing with the market. I think the market needs to be as well extremely low cost to access, very digital, very fast. It needs to serve as a layer underneath these kind of innovative models. Then I'm not seeing this as actually being now a challenge to us as the market will continue to grow. I think we'll have multiple of these business models coexisting. At the end, I know that even the most innovative companies, they need a market because they're never 100% balanced. So you could say there is an amount of free riding happening, and we have this always, that there's more aggregation happening. A utility does that. A large utility aggregates as much as possible to not bring the volumes to market. You can call that free riding, but you could be worried, or you can just say, no, it's innovation, and I think it tends in the same direction. So I think, from my angle, the biggest competition for us as a company is at the moment not other marketplaces.
Yep.
We're pretty much alone in Europe. In Germany, we're processing now, or roughly 50% of power and gas goes through our platform. So we're kind of very large in this. But the biggest competition actually are these more verticalized, integrated models, and we'll see how it goes.
Yeah, time will tell. Jan-Willem?
Yeah, so I wouldn't underestimate the traders. And so both the better traders of large energy companies and the more traditionally financial traders. So Wall Street coming in, there was this mention of Citadel earlier in their acquisition in Germany of, was it Flex Power? And so, yeah, having worked at Goldman 2005, 2010, and having seen sort of how traders were moving out the door and quants were coming in to automate everything, there's an infrastructure that is there, there's an experience, there's a depth of market, so access to liquidity, and there's balance sheet. And so great that you have a fantastic algorithm, but if you're not willing to put that balance sheet to work for good tolling agreements or whatnot, you're not going to win in this market. And so my hope was already from 2010 with my first company that these flexibility would become a tradable liquidity in the same way that derivatives and other products on financial markets have become very, very liquid. But I think that time is coming now, and I think we're going to see more traders step into this market and capture opportunities ranging from very short-term volatility to congestion markets and even sort of grid markets where they can be active.
Joe, I'm guessing you have an opinion on this.
Yeah, so I think there will be a couple of really big winners at this customer application layer. I would argue that that's going to have so much innovation, we don't know exactly who it will be. Revolut could be doing energy in the next few years, for example, right? The idea of the traditional energy supplier and the control it's had changes when power is distributed and access to homes and businesses changes, and you get better access to things like market pricing and risk management, all the things that have stopped these companies going into energy. That is going to become available. But I would actually argue, I would be quite bullish on companies that are getting very smart about combining the software and the hardware, right? It's like the octopuses and the fuse at a home level. It's going to become integrated. You've got to own the home, own the infrastructure, put the batteries, put the solar, put the behind the meter, and connect that together. But otherwise, it will be the infrastructure providers, right? It's the people selling the shovels, I think, over the next 10 years that are going to really be able to maximize the opportunity, and whether that's in short-term like trading opportunities, analytics providers, infrastructure providers, etc. Because that customer application layer is going to be pretty brutal, I think, in terms of competition and new market entrants. But yeah, definitely going to be some very, very big winners on both sides.
Great, thank you guys. I feel like we have time for one question, which does anyone in the audience have a question for these guys? Or should I keep asking them things? It's very hard to see. We've got one.
Where do you see precise time providers?
Can you speak up a little?
Where do you see precise time providers playing in that space? Is there any precision time in trading?
Is this in terms of like specific shape trading, like 24/7, like half-hourly settlement shape trading, or precision time in
is this going to be space to play for providers of precise time?
More and more people.
And so then you're thinking, for instance, of the kind of plays that they do currently in currency markets, where that is
Exactly.
Oh, like high frequency
Exactly.
trading.
High frequency trading.
Yeah.
Yeah, so, yeah, where you have sort of really the point of moving even data centers close to the New York Stock Exchange and these types of things to be right in time. So we see stuff moving closer and closer and closer to real time. So there will be more opportunity closer to real time, and that means you already see sort of settlement going from an hour to 15 minutes, but then imbalance management is already at a minute scale. A lot of the grid services are second or sub-second scale, and so if you want to arbitrage across that entire ecosystem, if you look at where optimizers are making their money today, it's essentially on, well, some old school traders in the market who are still sort of trading on an hour by hour basis, and there are ramp rates that they can sort of capture. That will increase as people chase where the last inefficiencies are left in the market, and it will be closer and closer to real time. So I think there is a big place for that.
But not now.
What's that?
Not now.
Give it a year or two. I think it's evolving to the minute scale, now to the second scale, but it will become more important, yeah.
Okay, guys, we are over time. Please join me in thanking my panelists here today.